Hello everybody, welcome to my YouTube channel. My name is Joshua Then. In this video, I will be explaining how does arbitrage works. So a lot of people have been asking that how does arbitrage work and how can you make money with arbitrage? And I've been trying to explain this over and over and over again. So I thought it would be the best to drop a YouTube video on what arbitrage is and how does it work and how can you make money with arbitrage. So I'll start with what is crypto arbitrage. When you're talking about crypto arbitrage, it means buying cryptocurrency on exchange and on a lower exchange, like buying cryptocurrency on an exchange that is having a lower price and selling it for a higher price on another exchange that is having a higher price, allowing you to make a profit. So what this is trying to say is that arbitrage is just taking the advantage of price differences between exchanges. So let's say for instance now, um, on Binance, Bitcoin is trading at, let's say, $42,000, and on Huobi it is trading at 42,500 dollars. So that means if you buy one Bitcoin on, on Binance and you sell on Huobi, you're going to make a profit of $500 without having to leave the trade for maybe a period of time. You know, normal crypto trading, you have to like buy and wait for the price to go higher before selling. But in arbitrage, it is instant because the price difference is there already. There is a low price on an exchange, there is an higher price on another exchange. So when you buy on an exchange that's having a low price and sell on an exchange that is having a high price, you're going to make a profit. You're going to make a profit. So uh, in reality, a profit this high is unlikely given most platforms take a cut, but it is certainly possible to make something if you are smart. So what it's trying to say is that exchanges we also charge their own withdrawal fee and transfer. You want to make transfer from one um, crypto exchange to the other, you have to pay your network fee and the like. So you might not actually get 500, let's say in this instance. So um, but when you are trading with a large volume, you'll be able to like suppress the effects of the network fee or the transfer fee and the like. So if you are using a before, let's say you're using $1 million to trade arbitrage, for example, you know, no matter the transfer fee and the deposit withdrawal fee you're going to pay, you still have something tangible at the end of the day. So that's why arbitrage is profitable if you are smart. If you are smart. So like I've said before, arbitrage is different from other trading strategies since you are not taking advantage of price changes over time. So I've said that earlier that you don't buy and wait for the price to go higher before selling because you are taking advantage of price differences between exchanges. So the price difference is there already. And also note this, arbitrage is not only peculiar to cryptocurrencies, so it also happens in other markets like the forex market and the stock market and the like. So um, that's what arbitrage, crypto arbitrage is. Then the types of arbitrage, although you might not need this in like in the practical aspect of making money with arbitrage, but you need to have the knowledge. You need to have the knowledge of it. So now you should get the basic gist, but did you know that there are a few different types of cryptocurrency arbitrage, all of which work a little differently? Yes, that's right. So just as you thought, you know it all, we are throwing you a curveball. So you might think, okay, all about arbitrage is buying on low priced exchange and selling on high high priced exchange. That's not all to arbitrage. That's not all to arbitrage. We have three different types of arbitrage. So I'll be talking about them briefly. So the first one is partial arbitrage. This type of arbitrage involves purchasing crypto from one exchange and immediately selling it on another for more money. So that's just the normal arbitrage that everyone knows, that you buy on an exchange, you transfer to another exchange, and you sell you sell. That's the the type of arbitrage everyone knows. And the second one is convergence arbitrage. So here a coin bought on one exchange is sold short on another exchange. The goal is to see both prices converge, and which is when the arbitrator, that is the person that is trading the arbitrage, closes both positions. So this is just it. Let's say, but for this kind of convergence arbitrage, you have to like have let's say you want to do arbitrage on Bitcoin now. So I want to use, let's say, Binance and Coin. So you have to have both, like have both Bitcoin and USDT on both Binance and Coin. So this is how you do it. So let's say on Binance now the price is low, while on Coin it is high. So what you do is that you buy Bitcoin with USDT on Binance, but you won't transfer to KuCoin. But since you have Bitcoin already on KuCoin, you do what? You sell Bitcoin on on KuCoin. You buy on Binance, you sell on KuCoin, so that at the end of the day you are going to have what? You are going to have a profit. So it's going to converge. When you close both pages, it's going to converge. So you don't have to pay transfer fee, like transferring from one exchange to the other, and you can do that over and over and over and over and again. So depending on the price difference. So I hope that is clear enough. Then the third one is triangular arbitrage. This is kind of more complicated than the two straightforward types of arbitrage. So this type of arbitrage, triangular arbitrage, involves more than one trading pairs. It involves more than one trading pairs. So you have to use sometimes like up to three pairs of currencies to trade. So I'm going to give an example to make it clear. This is an example from Investopedia. So um, it said, as an example, suppose you have a $1 million and you are provided with the following exchange rates. Like I said earlier, that arbitrage does not only work with cryptocurrency, it works with forex, stock, metals, oil, and the likes. So Euro US dollar at 1.15, it is that of Euro and pounds 1.4600, and US dollar and um, pounds to 1.6939. So with this exchange rate, there is an arbitrage opportunity, and this is how you are going to get the arbitrage opportunity. The first thing is that if you sell dollars to buy euros, this is the calculation. That means you're having an initial capital of 1 million, and you use that dollar to buy euros. You are going to get 863,110 euros. So then after that you sell euros for pounds. You know, the first um the first opportunity here is the um using the first rate, euro US dollar. Then for the second one, the second point, you have to use the second rate, which is euro pounds. So now, if you sell euros for pounds, you're going to get 591,171 pounds. Then you now sell that pounds back to dollars, you're going to get 1,001,384 dollars. So now, if you subtract the initial investment from the final amount, you have 1,000,001,384 minus 1 million. You're going to get 1,384 as your profit. As your profit. So That's just how it works. Let me show you a diagram. So this is just it. You use dollars to buy euros, then you use euros to buy pounds, then you change it back to dollar. So that's how triangular arbitrage works. Now, why is arbitrage possible? Arbitrage is possible due to a whole lot of reasons, but I'm going to give just four here. So the first one is variation in liquidity. Every exchange has a different amount of liquidity for each asset depending on how many people buy or sell it. This will naturally vary between exchanges, resulting in different prices. Higher prices when liquidity is limited. So this is just when you're talking about liquidity. Liquidity is like money that is flowing. Yeah, let's just put it. A money that is flowing. That is people are buying, selling, buying, selling. We're talking about liquidity is like um, like the ease of exchanging your assets, buying it and selling it. Like so, that's what we call liquidity. Liquidity. So let's say for example, the world most largest cryptocurrency exchange, Binance. It has a lot of volume, daily volume, millions of people trading on the platform. So it has a huge liquidity. It has a huge liquidity, and if you compare it to other small uh, small exchanges like let's say Bybit, so or Super EX. So these are small cryptocurrency exchanges, and if you kind of see you see that there is a uh, there's a difference in the liquidity, and this will also affect the the prices because on exchanges like Binance the price will be changing very quickly, but on small exchanges the price might not adjust quickly. So with that you can take opportunity to take some money out of the market. So the second one is different exchange types. So not all exchanges selling cryptocurrencies are the same. Many target different types of investors or different countries, which can affect prices. So um, there are different exchanges and targeting different what do they call it? Different countries. Let's say for example, Roku mainly is for Nigerians and African. Let me just say so because I use it very well, and most of the time the price on of dollars here on Roku is usually lower than that of Binance every time, every time, every time. So if you are someone that is that has a a huge amount of money, you can do USDT arbitrage between Roku and Binance. So yeah, that's a secret. That is a secret. So wow, because the difference is that Binance targets a worldwide, a global market, while Roku mainly for now is let's say African. I don't know for Nigerians mainly, sure. So then other things are withdrawal and deposit time. Exchanges with slower processing times take longer to catch up with the overall market rate. So withdrawal and deposit times also um, affects um, the the prices of the cryptocurrencies. Then foreign exchange rates. So if you are really smart, you might even be able to generate profits by buying crypto at one exchange rate and selling it in another. So allowing you to secure a profit if it is relatively cheaper in one currency. So just like let's say um, you use naira to buy US dollar now, then you sell it back, let's say to cedis, knowing that okay, um, the value of cedis is more than naira. So it's just like the triangular arbitrage. So like you use naira to buy USDT, then USDT you sell it back to cedis, and so most of the time it works like that. But you have to make sure that there is a price difference. So um, then I would like to show you a real life example, of arbitrage opportunity. So let's pick an asset. Let's pick an asset. Let's pick an asset. So let's pick um, Bitcoin, for example. So let's pick Bitcoin. So it's a kind of loading. So so let's move it. Um, let's move it. Okay. So this is www.coinmarketcap.com. So then you can go to the market tab. Can go to now look at this. Look at this. So we can see that across different exchanges there are different prices. There are different prices. There are different prices for uh, Bitcoin. You can see it all over, all over, all over, all over, all over. You can see, can see, can see. So this is we have coin one trading at 19,332. Whereas you have Binance.us still trading at 19,250. See, so you can just see it. You can just see it all around. This for only Bitcoin. See, there are different prices. So you can see that there is always arbitrage opportunity in the market. There is always arbitrage opportunity in the market. So that's it, and that's why if you can't handle like doing manual arbitrage, that's why I advise using robots. So um, among many arbitrage robots that you can use is we have AI Tiger. I'm going to drop the link in the description. We have XMAI. Um, I've, I've witnessed that XMAI before, and there's another one that will be launching very soon in this October. Africa Arbitrage System. So all these bots they can help you to trade cryptocurrency arbitrage easily without you having to involve yourself with it. And trust me, the world is evolving. The world is evolving. So we are still thinking with the mindset of doing this about making money. You are going to do yourself a lot of harm. You are going to miss out a lot of good opportunities. So um, this is where I will be ending this video this video and I will be dropping a video on my YouTube channel again. Is like it's just a short video of an interview with about arbitrage. Yeah, it's one of the um, world most richest crypto traders. So just a 30 seconds um, short video. So I will see you guys on the next video. Bye bye.